Today, ladies and gentlemen, I want to tell you the times I actually lost money trading and how I found my way into dividend investing, because there's nothing easy building a six-figure dividend portfolio. And I want to tell you about some stocks you probably don't even know exist and how I lost money trading them. So let's jump right into this. Welcome back, passive income investors alike. Unfortunately, I don't have time to make a video at home. I had to leave. I'm out and about, so I couldn't do it in the studio at my parents' house. But I think this is really important to talk about, and I wanted to find a different kind of loss a lot of people don't talk about, especially swing traders, day traders, and I think it's a really important metric to pay attention to, and it's one of the reasons I actually became a dividend investor, and it has to do with a different kind of loss. It is not a loss in the red. It's not like you're down on a stock and you sell it. It's in fact, even if you make money on a stock and you sell it and it goes up and it doubles, triples, quadruples into the future and you no longer hold a position in it, that in my opinion is what I call an opportunity loss, and it happens all the bloody time, and it has happened to me more times than I can count. I'm going to tell you a few stocks you probably don't even know existed that if I didn't overtrade, which a lot of us do, if I just didn't overtrade and I held on to them, I would have been killing the game right now. And I mentioned this in the past where I'd probably be worth about $500,000 in the long run. But let me mention some companies you probably don't know first. Starting with Saputo cheese, an Italian family that makes cheese. This was a company I came across quite some time ago in my early days of investing, and I never pulled the plug on it. I watched it and watched it and watched it. I loved the books, got used to the numbers, wanted to find some kind of food industry to buy into, and I never pulled the plug. So Saputo was one of the first ones that I recognized this kind of pattern, and it continued on, guys, with Dollarama. Do you know the dollar stores? Dollarama, I was buying it around $80 a share, and then I just didn't like the company. I don't know why. I don't know why I didn't hold on to it. It's more around the same time I started getting into dividends, and I couldn't stand. It only paid like a 0.5% dividend, but that wasn't the point. It was expanding rapidly when I was buying it, and the stock went all the way up to $200. They did a stock split, and now it trades around $40 on the stock split or something like that. I can't remember how much they divided the shares out, but that was another one that if I held on to, I actually would have just doubled my money. Literally would have doubled. More than doubled, which is also an annoying feeling to have. Now here's another one that bothered me to no end, because this one was recently. This wasn't even more than a year or two ago, I think. And this is Shopify. Do you know Shopify? I actually run all of my stores on Shopify, and I'm so flabbergasted by this, because this was another stock that I was buying in the mid to high 100s. I can't remember what I was paying for it, and now I'll throw a screenshot up. I'm crying inside at how much Shopify's worth, and it just bothers me, guys, when I look at this stuff. And this is why I became a long-term dividend investor. And I'm going to tell you the last one that I mention all the time, which is Canopy Growth Corp. I made $20,000 on Canopy Growth Corp. I bought $8,000 worth at $8 a share. I owned 8,000 shares, and I sold out in the low 20s and the low 30s, making roughly somewhere between 28 and 30,000. But after my profits and everything on that one trade, just that one trade, I pocketed somewhere between $20,000 and $22,000. And boy, oh boy, if I just held on to that play, that thing ran all the way to 60. Luckily, I still own it, but not as an individual company. Like, I don't own it as Canopy. I own it as Constellation Brands that owns 40% of Canopy Growth Corp. And I'm happier to mitigate my risk that way now. But honestly, it just comes back to the same point, guys, that you need to buy companies you believe in. You need to believe in them for the long term. And what I mean by the long term is I mean the bloody long term, like the Warren Buffett long term. Like, you need to be holding on to these things for 50 plus years, and you need to be nursing them for every bloody dime you can, especially when you find yourself that golden goose. Don't let go of the golden goose, guys, just because it looks tempting. There's nothing wrong with balancing a portfolio, maybe taking some shares out and restructuring it in a way where it's not like this crazy huge position in your portfolio or anything, but you definitely want to hold on to those companies that I'm going to call your breadwinners, those golden goose tickets. If you find something you understand and you buy, don't sell it, don't overtrade, don't be that guy. So many of us overtrade stocks, and we don't like to admit it, And I'm talking to you swing traders out there. This is why I have a hard time swing trading. There's companies that I think are good for swing trading, like real estate investment trust, ETFs, anything that is basically doesn't really have a lot of equity change. Gold companies do this a lot as well. You can get into gold companies, guys. They do, there's a company called BTO that I've swing traded in the past that has actually made me money, and I've considered doing it in the future, because this is a company that usually trades between the $2.50 mark and the $4 to $5 range, and it plays it over and over again every year after year after year. And I always figured that would be a good stock for a swing trade. But some of you are out there swing trading companies and stocks that pay out not only crazy good dividends and reliable dividends, but companies that have really good prospects into the future, and you give up all of that future growth and all of that future income, and you think in the short term it's worth getting out. I'm going to use BTI as an example. British American Tobacco is one of my favorite stocks this year. I've been buying it like it's been candy, and a guy told me that he owned a lot more than I did, but he bought it on the same dip that I did, and he said if he sold out when it was rallying up, that he could have made like $30,000 with the position that he had, and then it came all the way back down to where it is now, where there's no really equity gain in it, and he's kind of pissed. He's like, oh, the dividend's not even worth as much as I would have made. And it's like, you can say that in the short term, absolutely, but in 5, 10, 15 years from now, that story might change in ways that are so unbelievable. So you can't be so short-sighted and try and do all these swing trades. If you're going to swing trade and you're going to get good at it, go for it. But you have to understand that when you sell, guys, when you hit that sell button, you give up on any future potential that company can have. And when we're talking about companies like Apple, Microsoft, Tesla, companies that are just doing something so drastically amazing that you know they're going to be around in the future, to give up on what those companies might do. You know, there's a funny joke that goes around with Apple. Yes, we all know that meme that goes around, that Apple meme, that guy that helped start Apple, that essentially sold his shares back to Steve Jobs for like a couple $1,000. And everyone makes fun of the day. That meme goes around and says that if you had a bad day, remember, you could have been this guy that sold his Apple shares in like the 80s or 90s that would have been worth hundreds of millions of dollars today. And it's like, yeah, that's true, but what about you? You never even bought the company. You've had 20 years to buy Apple stock, and it's done nothing but go up, and you didn't buy it. That's the funniest part. But you know what they say about growing a tree, guys? The best time to grow a tree was 10 years ago. The next best time to grow a tree is right now. So what are you waiting for, guys? You need to be buying these AAA rated companies that you know are going to be a staple a decade from now. These companies could be worth more than $2 trillion. You have no idea what future potential these companies hold, but you'll never get to experience that potential unless you physically own them. So be careful with what you're doing out there, guys. Remember, if you're on this channel, chances are you're already a passive income investor, and you're already making investments that are going to cash flow you for the rest of your life, because cash is king, and I'm here for that cash, baby. And that's why I make these videos, to document my passive income journey to financial freedom, because I understand future potential, and I want to be able to retire by the time I'm 35, or have financial independence, retire early. Not that I plan on quitting my work, just to have the options to know my bills are paid no matter what happens. And I believe you do that through basically long-term passive income means, and not by over trading, not by gambling, not by taking risk, and not by making it out like, oh, because you made a 20 or 30% gain on your swing trade, that you're a smart genius at stock trading. It's an interesting world, guys, and I'm glad you're sticking around for my journey, and I love that you're part of this community. So consider subscribing and slapping a like, because I love y'all very, very much. But I got to continue what I'm doing here, guys, so stay cool, stay awesome. I look forward to chatting to you real soon.